Lesson 3: Chart of Accounts. An account is a unique record used to track a specific type of financial transaction. In the real world, a business entity may have hundreds of accounts to record its transactions. How do you deal with a situation where you have hundreds of different accounts to record various transactions, aiming for less error-prone and fulfilling reporting requirements? You can solve this problem by categorizing, using unique identifiers, and indexing the accounts, which leads to the creation of the chart of accounts. Accounts can be categorized into two broad categories. 1. Balance sheet accounts. 2. Income statement accounts. We can subcategorize the balance sheet accounts as follows. Current assets. These are assets that are expected to be converted into cash or used up within 1 year. Non-current assets, also known as long-term assets. These are assets with a useful life longer than 1 year. Current liabilities. These are obligations that are expected to be settled within 1 year. Non-current liabilities. Long-term obligations, including bonds payable and long-term loans. Equity accounts. Represents the owner's or shareholder's interest in the business. In addition to categories, accounts should have unique identifier and description. Let's take the example. Unique identifier should have a unique number or prefix to identify the category. Such as asset 10 fixed assets equals 10,100 long-term asset equals 20200. In case of liabilities, 20 equals liabilities, identifier or prefix, 20,100 equals current liabilities 20200 equals long-term liabilities. In case of equity 30 equals equity, identifier or prefix, 30,100 equals common stock 30,200 equals retained earning. In case of revenue, 40 equals revenue, identifier or prefix, 40,100 equals sales revenue 40200 equals service revenue. In case of cost of sales and gross profit 50,100 equals cost of sales or COGS 60,100 equals gross profit. In case of operating expenses, 70 equals identifier or prefix, 70,100 equals operating expenses 70200 equals admin expenses. Account structure with segments. Segments are used to capture information for management accounting reporting purposes. For example, main account department section, e.g., 10100, 01, 02. Chart of accounts with dimension. In the context of accounting and financial management, dimensions refer to additional attributes or categorizations that can be applied to transactions or accounts. Unlike the chart of accounts, which primarily focuses on the nature of the transaction, dimensions allow for more detailed analysis based on specific criteria. For example, dimensions could include attributes such as department, location, product line, customer, or project.